If you are a risk taker and wish to create a wealth of 9.1 crores to 11.6 crores in long term, then this video is for you. I am Nilesh Bodhi and you are watching Coach Fin. So in this video, we are considering 4 mid-cap funds, which is PGIM India Mid-Cap Opportunities Fund, Axis Mid-Cap Fund, Kotak Emerging Equity Fund and Edelweiss Mid-Cap Fund. The category of all these 4 funds is Equity Mid-Cap. If you see, PGIM India Midcap Opportunities Fund was launched on 2nd of December 2013. Axis was launched on 1st of January 2013. Kotak Emerging Equity Fund and Edelweiss was also launched on 1st of January 2013. The AUM of PGIM India Midcap Fund is 5,168 crores. For Axis it is 16,566 crores. For Kotak Emerging Equity it is 18,259 crores and for Edelweiss it is 1,863 crores. As per Riskometer, these 4 funds belong to very high risk category funds. The minimum investment for SIP is 1,000 and a lump sum of one time is 5,000 in PGIM India Midcap Opportunities Fund. For Axis, SIP is 500 per month and one time lump sum is 500. For Kotak Emerging Equity Fund, SIP is 1,000 per month and one time lump sum is 5,000. For Edelweiss, SIP is 500 per month and lump sum it is 5,000 one time. Let us now check the fund details for all of these 4 funds. Expense ratio for PGIM India Midcap is 0.45%. For Axis Midcap it is 0.47%. For Kotak Emerging Equity Fund it is 0.48% and for Edelweiss Midcap Fund it is 0.57%. The exit load for PGIM India Midcap Fund is 0.5% if you exit in 90 days. For Axis Midcap, Kotak Emerging Equity Fund and Edelweiss Midcap Fund it is 1% if you exit in 365 days. The benchmark for PGIM India Midcap, Kotak Emerging Equity Fund and Edelweiss Midcap is Nifty Midcap 150 TRI and for Axis Midcap it is S&P BSE 150 Midcap TRI. Now, if we have a long-term horizon, then these funds are good for long-term investments. PGIM India Midcap Fund is managed by Aniruddha Naha since 5th of April 2018. Axis Midcap is managed by Shreyas Devalkar from 23rd of November 2016. Kotak Emerging Equity Fund is managed by Pankaj Tibrewal since 1st of January 2013 and Edelweiss Midcap Fund is managed by Tridip Bhattacharya since 1st of October 2021. Let us check the fund details for all of these 4 funds. So PGIM India Midcap Fund has given 8.27% returns in 1 year basically. For 3 years, it is giving 34.68%. In 5 years, it has given 18.31% returns. And since inception, it has been giving 19.08% returns. Axis Midcap Fund has given 1.13% in 1 year, 21.97% in 3 years, 17.11% in 5 years. And since inception, it has been giving 18.68%. Kotak Emerging Equity Fund has given 4.80% in 1 year, 23.38% in 3 years, 14.45% in 5 years and since inception it is giving 19.5%. Edelweiss Midcap Fund is giving 2.5% in 1 year, 24.53% in 3 years, 15.02% in 5 years and since inception it has been giving 20.14% returns. Let's check the portfolio allocations now. So if you see the number of stocks held by PGIM India Midcap Fund, it is 48. It is investing 13.34% in large cap funds, 39.76% in mid cap and 25.01% in small cap funds. If we see the allocation by sector, it is investing 16.52% in financial sector, 16.14% in capital goods and 11.45% in automobile sector. If we see the top stock holdings, then it is investing 4.48% in TVS Motor Company Limited, 4.35% in ABB Limited, 3.91% in Timken Limited and 3.85% in SDFC Bank Limited. Axis Midcap Fund is holding 65 stocks in the portfolio. It is investing 11.45% in large cap fund, 44.84% in mid cap fund and 13.58% in small cap fund. If we see the allocation by sector, it is investing 14.73% in financial sector, 11.38% in technology sector and 9.89% in services sector. If we see the top stock holding, it is investing 4.43% in Cholamandalam, 3.85% in ICICI Bank Limited, 3.03% in Trent Limited and 2.63% in Bata India Limited. Kotak Emerging Equity Fund is holding 71 stocks in its portfolio. If we see the allocation by market cap, it is investing 5.68% in large cap, 54.21% in mid cap, 23.7% in small cap. If we see the allocation by sector, it is investing 18.04% in capital goods, 11.79% in financial sector, 11.77% in chemical sector. If we see the top stock holding, it is investing 4.63% in Schaeffler India, 3.86% in Supreme India Limited, 3.58% in Thermax Limited, and 3.46% in Coromandel International Limited. If we see Edelweiss Mid Cap Fund, it is holding 61 stocks in its portfolio. If we see the allocation by market cap, it is investing 4.05% in large cap, 43.53% in mid cap, and 28.78% in small cap. If we see the allocation by sector, it is investing 19.26% in financial sector, 13.22% in capital goods, and 10.2% in automobile sector. If we see the top stock holding, it is investing 4.05% in ABB Limited, 3.39% in Cummins India Limited, 3.38% in Federal Bank Limited, and 3.36% in Navin Fluorine. Let us now check the risk measures parameters for all of these funds. So the first parameter is standard deviation. It gives an idea about how volatile fund returns has been in the past 3 years. Lower value indicates more predictable performance, whereas higher the standard deviation, higher is the volatility of the fund. So as we can see, PGIM India Mid Cap, it is highly volatile. Second parameter is beta. Beta gives an idea about how volatile fund performance has been compared to similar funds in the market. Lower beta implies the fund gives more predictable performance compared to similar funds in the market. A beta greater than 1 indicates that a stock's price is more volatile than the overall market. A beta less than 1 indicates that a stock price is less volatile than the overall market. And a beta of 1 indicates that the stock price is moving identical to the overall market. So in this case, the beta is volatile since it is more. The third parameter is Sharpe ratio. Sharpe ratio indicates how much risk was taken to generate the returns. Higher the value means the fund has been able to give better returns for the amount of risk taken. Higher the Sharpe ratio, better is the fund. And as we can see, the Sharpe ratio is better over here because this fund has taken great risk to give returns to the investors. Now the fourth parameter is alpha. Alpha indicates how the fund has generated additional returns compared to the benchmark. Means this fund has put in a lot of efforts for generating additional returns for its investor, and as we can see, alpha is better risk adjusted returns. So PGIM India Mid Cap, standard deviation is high, beta is high, whereas Sharpe ratio and alpha are very good. Now let us see the second fund, which is Axis Mid Cap. As we can see, standard deviation it is low volatile, which is a required parameter for any fund. Beta again low volatile, it's meeting the benchmark. Sharpe ratio, better risk adjusted returns. Alpha again better risk adjusted return. So in Axis Mid Cap Fund, all the four parameters are good. In Kotak Emerging Equity Fund, the standard deviation is high, beta is high, Sharpe ratio is good, alpha is again poor because it is not able to generate additional returns. Not putting that much of efforts. But yes, when it comes to generating returns for the investors, then yes, it is putting the required efforts and we are getting the returns because it is taken the risk to generate the returns as per Sharpe ratio, as we can see. In Edelweiss Mid Cap Fund, standard deviation is high, beta is high, Sharpe ratio is good, and alpha is also good. So I hope these four parameters are clear to you, and you know when you are choosing any of these fund, what parameters to check. Downside protection. It is one of the most important parameter while we consider any fund. Investors evaluating actively managed mutual funds should not only focus on a fund's ability to earn higher returns than the benchmark, but also on how much downside protection it provides. In other words, the fund's return should fall less than the benchmarks when the markets decline. Okay, so for a 3-month period where we see the category average is falling -6.89%, only there are two funds, that is PGIM India Mid Cap, which is falling -5.40%, and Edelweiss Mid Cap, which is falling -6.08%. So what we can say here is that in 3-month period, these two funds are giving good downside protection. For 6-month period where the category average is falling -10.64%, there are again two funds, which is Kotak Emerging Equity Fund and Edelweiss Mid Cap Fund, which is falling less compared with the market. So in this 6-month period, two funds, which is Kotak Emerging Equity Fund and Edelweiss Mid Cap Fund, is giving good downside protection. Similarly, for YTD, that is year to date, where the category average is falling -67%, there are again these two funds, that is Kotak Emerging Equity Fund and Edelweiss Mid Cap Fund, which is giving good downside protection because they are falling less compared with the category average. I hope this particular parameter is clear to you now. Benchmark comparison. This is one of my favorite parameter when I choose any of the funds. Okay, So the first mutual fund is PGIM India Mid Cap Opportunities Fund. So as we can see, since its inception, that is 2014 till 2022, it has never beaten the benchmark. So for my perspective, I will never go with a fund which has never beaten the benchmark. Okay, because I will never get the returns which I want. You know, right? And obviously, I mean, when the fund is not able to beat the benchmark, I won't have the confidence that I will get good returns, and my capital will also go down after some time. You know, there is no guarantee over here, right? Because if we see the trend wise, I am not seeing this particular fund beating the benchmark at least once. When we see Axis Midcap Fund, then we can see from 2014 till 2016, it is beating the benchmark. Then again, it is going parallel with the benchmark till 2017. From 2017 till 2018, it is not beating the benchmark. It is going below. But from 2019, it has again started coming up and it is beating the benchmark till 2022. That is till date today, right? So this pattern is okay for me because I can see when markets are volatile, the funds are not able to beat mark, and it is not possible to beat the benchmark all the time due to external factors or market conditions that we all know, right? When we see Kotak Emerging Equity Fund, this has been a consistent performer since 2014. As we can see, it is continuously beating the benchmark. There was a slight touching to the benchmark in 2020. As we know, it was a COVID period. But in that period also, it has just come very closer. And after that, it has again taken the ride upstairs, right? So from a benchmark comparison, Kotak Emerging Equity Fund has been the best till date. And when we see Edelweiss Mid Cap Fund, then again it is again beating the benchmark over a longer period, as we can see from the curve, right? So I hope you know the benchmark comparison now and you have studied this parameter well, and you will use it while selecting any fund. So it is returns time now. If we invest 5,000 per month in all of these funds, what would be the expected returns in 10 years, 20 years and 30 years period? Let us assume that these funds, whatever returns they are giving today, they will be continuing to give the same return for the next 30 years. So if we invest in these funds, what is going to be our returns? So if we invest 5,000 rupees per month as an SIP in PGIM India Mid Cap Fund, the returns are 19%. So in 10 years, we will be having 17,92,287 rupees. In 20 years, our wealth would be 1,35,98,287, and in 30 years, our wealth would be 9,13,65,744. For Axis Midcap Opportunities Fund, it is giving 18% returns. So in 10 years, our investment would be 16,81,288. So that is the wealth in 10 years. For 20 years, our wealth would be 1,17,17,436, and in 30 years, it would grow to 7,16,26,446. For Kotak Emerging Equity Fund, it is giving 19% return. So obviously it is going to be the same as like PGIM India Midcap. That is in 10 years, 17.92 lakhs. In 20 years, 1.35 crores. And in 30 years, 9.13 crores. For Edelweiss Mid Cap Fund, it is giving 20% returns. Okay. So in 10 years, our wealth would grow to 19,11,818. In 20 years, it would grow to 1,58,07,397. And in 30 years, it would be 11,68,004,009. If we invest 2 lakhs as lump sum in these funds, what are the returns which we would be expecting? So if we see PGIM India Mid Cap, then for 10 years, our investment would grow to 11,38,937. In 20 years, it would grow to 64,85,885. And for 30 years, it would grow to 3,69,35,062. When we see Axis Mid Cap Fund, then the returns are 18%. For 10 years, our investment would be means the wealth would grow to 10,46,767. For 20 years, our corpus is going to be 54,78,607, and for 30 years, our wealth is going to be 2,86,74,128. Since Kotak Emerging Equity Fund and PGIM India Midcap is giving 19%, the returns are going to be same. That is in 10 years, 11.38 lakhs, in 20 years, 64.85 lakhs, and in 30 years, it would be giving 3.69 crores. When it comes to Edelweiss Mid Cap Fund, it is giving 20% returns. So in 10 years, our 2 lakh lump sum would grow to 12,38,347. In 20 years, it would be 67,520, and in 30 years, it is going to be 4,74,75,263 rupees. Thanks for watching. Please note that mutual fund investment are subject to market risk, and past performance does not guarantee any future performance. If you have any goals like buying a car, buying a home, children's education, international holiday, retirement, then fill in your data which is given in the Google Sheet link, and if you want me to be your mutual fund extrovert, I'll have a personal discussion with you. Please comment and let us know how did you like this video. Also, if you are new to our channel, then please subscribe and hit the bell button next to it. Don't forget to create your free lifetime account on Asset Plus for investment in mutual fund. That's all for now. See you in the next video. Till then, take care.